my visuals have gotten a lot better as we start this meeting with a four PNF edge zone that come in real time, right? And I want you guys to have something. It doesn't have to be this, but something that you can lean on visually to start making assumptions that don't feel like lucky guesses. So, for instance, when you get above some of the red imbalance selling, whether it's an edge zone or another platform you use to see sellers come in, well, what happens when you get above it? You could start to predict that the market is bullish here without having to wait till it actually jumps another, in this case, 6 or 7 ticks. And the difference, and this is what I want to key on, the difference between when a seller comes in and it kicks it lower and it just hangs around there. So when an edge zone or selling comes in of however you're watching it, the difference between when it comes in and the market actually reacts lower pretty quickly and it doesn't. So just think of that, those two options. Whereas you got, let's just stay on the sell side, you got selling coming in and it equals some really good and quick downside. I'll put a down arrow. Or versus, we'll use versus, selling coming in and it's just doing this, down, up, down. It's just chopping around. So there's two scenarios. Scenario one, selling equals some quick downside. And scenario two, you see the selling come in. And not everybody has these edge zones. Not everybody has Market Delta Desktop. But whatever you're using to identify selling coming in, is it scenario one or scenario two, where does it do what it's supposed to do, or does it just jerk around there, hang around there? To start sharpening your predictive skills as to, those moments, those scratch your head moments. So you could start to make those accurate assumptions. And I call them assumptions because you can't ever put yourself in a position where it's got to happen. You got to catch that internal dialogue if you're having that with yourself, like it's got to go down or it's got to go up. It has to happen. You start talking like that, you become stubborn when you're wrong. You really do. You actually become less confident because it's just like nothing has to happen. You're trying to stack probabilities and therefore create assumptions that are accurate, not just assumptions based on some anecdotal stuff, but hey, sellers are coming in and the son of a bitch cannot go down. Let me scratch my head. Let me start paying attention and reading order flow properly. Or selling is coming in and I didn't even have a chance to. How do you know that selling came in and the market went down fast? Because if you were trying to sell it, you didn't have a chance. Neither did anybody else. That was this case here, where this selling came in and it seemed like it kicked it down pretty quickly. And it would put this green zone in jeopardy, number one, because it already rotated down to it once in there, twice in there. This time would have been the third time, and this selling kicked it down pretty quickly. You scratch your head as to, all right, this has some downside to it. And this maybe isn't a long down-up bar qualifier to the upside. So you jot that down as to what bucket or category does it fall into when you identify buying or selling? Does it get the market to do what it was supposed to do? All right. And keep going over that in your head to help your predictive skills. So this market not only went lower off of this guy, but used it as better subsequent resistance, right? So far. I'd still be careful selling it back up in here. It's all right to sell it up there. It's not all right to be stubborn as it starts rallying above 99 and even. That's the part I'm trying to get you guys to pay attention to. Don't keep a long leash on shorts up here based on the prior tests on that 24 PNF. So I want you guys to, like here, some real-time stuff that I was hoping was going to happen. So this guy comes in selling, a couple things in mind. It just went away. But quick selling came in 96 even. We already broke from 99. And now the selling comes in. There's a strip of selling above right in here. But to me is some aggressive selling came in and it didn't go down right away. That's suspect downside right now, based on the fact we just broke from 99 and we might have to rally up a little bit more. Now, if it happens, I'm not surprised. Now, if they come back in selling, you watch it. So you see these couple ticks that it went up after that selling came in. Now selling come back in. So they take them 96 half bid and they quickly sold enough of them to get it to go sellers again. So to me, that says, okay, that might be the spot. It's not jerking around once it came in there. You have to know what to qualify for. Like this would have been too early when that previous guy came in there to sell. I'm not trying to get you guys to buy it. I'm trying to get you to say time it. So then it comes up into a thin spot. Let's say you're looking to sell it and this guy comes in, you take a quicker shot and you want a quicker reaction like that. You don't want it to screw around. There's other words I could use, but screw around up here if you're short. You want it to do that ASAP and recognize the difference between, we got that difference right here in real time. The first one didn't, so it had to drift up a couple ticks. The second one did. Now you see that green came in. Now I wasn't paying attention. I think he came in at 94.75. So if they're in trouble, let me get to this question here. So once selling comes in and moves 3 ticks quickly, and you see that then when you can't get short, then what do? You do two. This is case by case. I don't know what your risk reward is. Are you only risking 3 ticks, 4 ticks? Then you missed it. You have to decide whether that's good subsequent resistance. If it retests it, you'll take a shot, or you just missed it. You have to be willing to miss trades. You got to document when you miss trades, but you have to be willing to say, I missed it. So you don't chase it, number one, because if you're the kind of trader that, and let me draw this out so you can understand it. This applies to everyone. If you want to sell it here and you get a qualifier here at the same price, but you only want to risk 3 ticks above there, but by the time you're going to be able to catch it, you're 3 ticks away, but now your risk is 6 ticks. Just based on that simple math. If that's too much, then you have to say, I missed it. But I can't come in there and give you a scientific answer if that's what and I don't think that's what you were looking for. But it depends on if you're the trader that you're not risking 3, you're risking 3 points, well, then you're in that area. So you got to qualify the area. This one you could have caught. If you were looking to sell it based on this resistance and the red comes in, you could have caught it before 3 ticks. But you have to be looking to sell it. See, that's what's important about trading is you either have to be really quick if this is your cue to sell it. You didn't have no other cue to sell it. I'm just sitting here, not doing anything. Oh, I see this. I want to take a shot. Well, then you better be quick. But if you're looking to sell it and you're anticipating seeing that for you to take a shot, you'll miss less. Does that make sense? Did you see this green come in at like 94.75? Couldn't get it to go up, couldn't get it to go up, and that's where there's more downside. You don't have to have edge zones to practice this, because I know you guys that don't have Market Delta Desktop do have other indicators that are telling you when buying and selling comes in. See, the trick to order flow isn't just a recognition, it's the question to ask. It's the right questions to ask. There's a lot of stuff out there now that identify this and identify that. Sometimes they're identifying too much, but there's not too many people that are constantly getting you to ask the right question when you recognize what you're looking for. That's your answer. And so the same guy's saying he saw it, but then I will be willing to chase it. That's up to you. Is it chasing it, or are you still in your area? And if you're chasing it, and every time you're chasing it, you end up screwing the trade up, then you know not to do it. You just then mark it to missing it. I got to get quicker. Let me update the people that need settings for this. $987 with a min diff of 150. And then also consecutive 2 with previous. So double stack on the consecutive. Previouses are checked. 987 with a min diff of 150. And this is the one that's up now, bottom left of my screen share in the trading room. All right, so we're getting this in here. This one took a little longer to go down. I could just tell without even watching it because there was some size in here. But it's still like, okay, he got it to go down. This a-hole is in trouble. I'm going to start using some risque words. I think we're at that point. Let's you guys won't question my professionalism. Sometimes I just got to make a point. So these guys are in trouble and they're stuck a little bit and looking to maybe push it lower. Now, there was some red that came in that you don't want to see and have it bounce back against you. You want to see red, push it. Now, did you see that? Green couldn't go up, red couldn't go down. CHOP. Bears still have the leash for me until they get above 93. Just real-time stuff that you look at here. Red one comes in. Is he getting the market to go down somewhat quick? So far, he's below it. What's the rule of thumb? And I say this in the room, but I don't think I underscored enough like I'm going to in this meeting, so you guys know it and write it down. Wherever the edge zone comes in, a tick above it if it's red, a tick below it if it's green. And this is something that you have to understand like the back of your hand. What do I mean a tick above it? Well, they came in at 91.75. So if the tick above it goes bid, what does that mean? What price is that? A tick above where the red edge zone came in goes bid, the shorts could be in trouble. That price is 92. If it's a green edge zone buying or any other indicator you use to recognize buying and selling. A tick below it, if it comes in, if a green one comes in at 91.50, okay, a tick below it goes offered is 91.25. Now, if you do the quoting exercise and understanding bids to offers, offers to bids, you get that. That's the Mr. Miyagi moment. So they re-highlighted this. They're trying to validate this 91.75. They're having trouble going down, but then he comes back in and sells it. So you could still be comfortable short below 92. Came back in, you want to see that. But you don't want to see it, you know what, around too much. Longer. You remember when I talked about your internal clock? You want to get rid of the football, find a receiver, scramble. You're getting to that moment in this moment. And I'm glad we're getting some real time examples. It's always harder in real time, always, but possible. So this is when I would say, I'm probably, if I'm short in here, I'm probably in the hole. And I don't give an SHIT if it breaks 89 after you get out. You got to remember, this thing just broke since we've been on from 98 to 93 half, screwed around a little bit, sold back off to 91. Now you're not chasing to get out of a loser. That's worse than chasing to get into a trade, is chasing to get out of a trade. That's a crappy feeling, and I want people to minimize that. It's still going to happen. That's all right, George. This will be recorded. I didn't upload 2 weeks ago. I will. Now here, this has been, so it comes back in. If you're still bearish to get short, you keep a short leash on it because you're already down 6 or 7 points in the last sequence, right? In the last 10 minutes. and he comes in, so maybe you take a shot at 92 even. If you're making a trade every time you see an edge zone, you're trading too much. I'm just saying this for example's sake here. So let's say right now you see a red edge zone come in, you hit the bid, you're short 92, and you're able to scratch it right now. It's playing around. You got a short leash on it anyways because where you're at on the map, we broke from 98.5 within the last 15 minutes. So you want this son of a you know what to go down. Now you're seeing a green edge zone come in, and you're like, well, that's good if we could hit the 91 halves. Because if the 91 halves go offer, then the buying in here will say holy SHIT. But the sellers in here are going to say that, including you if you're short, if they take the 92 halves bid, because that's a tick above the 92. You can't be thinking about this either. You got to know a tick above or below. The red edge zone come in at 92 quarter, and the green will come in at 91.75. I know 91 quarters go offer. The bulls are in trouble. 92 halves go bid. Shorts are in trouble. One tick above the red, one tick below the green. Hey, they quickly go 92 even bid, and they crack into 217 of them. And if I'm short, this is what I'm thinking. These a-holes can't take it off, or I'm ready to throw this ball away if it doesn't go now, or within 5 seconds or 10 seconds, because they've got this guy coming in, this selling. It's not just one guy. This selling coming in, and then this buying coming in. They should have this guy in trouble, so it should go now. If I'm short these 92s, I'm going to scratch them if it goes back up, if it starts trading these 92 evens. And I don't care if it goes back to 89 after I get out. Again, this is if you're looking to get short anyways. Don't necessarily put on trades here just because of this scenario. Just giving you the qualifier when you want to get short. Now it's doing what it should be doing. They took out where that buying came in. You're breathing a little bit better. You're not feeling like this was a good guess. You see how they went kind of quick when they hit the 91 quarters. All right, so that is what I mean by that. That was a really good example to walk yourself through it. When should it go? They never took the 92 quarters back bid when I would have looking to scratch. It stayed even offer. They hit the 91.75s. I knew the 91 quarters go, we were going to get this, and you feel better about it. It's that clock that goes. Now, everybody's clock could be slightly different, but if you're using the right tools and asking the right questions, you're not surprised when this stuff is happening. But you got to follow it, and you got to be consistent. One other thing I wanted to cover is, and this came the light, this is what I thought about last week. One of the few Tuesday, in fact, I don't think I've ever canceled a Tuesday session, but I did last week because I wasn't feeling good, and I start feeling like crap again. This week I'm getting the kids colds from school. But anyhow, I was not, and this is the point I'm trying to make. You guys have to. This is a performance job. All right? Nobody is ever good enough to do it, to me, at 50% speed. Now, there are jobs that you guys probably could do at 50% because you've been doing it so long. But nobody's been doing it so long where I think you should ever do this at 50%, mentally or physically. And I don't mean if you're sick, don't trade. This is what just got me to think about this. If you wake up, turn on your machines and start trading, I think you're crazy. I think that you should be up and raring to go before you start opening your machine up or whatever. What is that? Working out for some of you. I'm not advocating everyone's got to work out before they trade. Some of it's 5 cups of coffee. I don't care what it is. But make sure you're alert when you open up your stuff. That could be just 30 minutes and you're ready. Because everybody worries about what they read and what they have to prepare, but then they fail to have the routine of just being awake. Just being awake. This is a performance sport, right? So could you imagine that you're playing basketball and you wake up 5 minutes before the game starts and you got to get out there, get your uniform on and play? No, those guys got a routine where they might eat something 2 hours before, and they go out, shoot around, then they go back, get dressed, then they go out and warm up, right? That's a performance sport. This is a performance sport. Now, you got to have a routine, and what it is different for everyone. Doesn't have to be hours of a routine. And I'm not trying to tell you guys, oh, you got to exercise 30 minutes. I care about any of that. I just care about how do you feel when you. I just thought about that. There was no way I could perform the way I felt. You got to be ready is the point. And the only way you're ready is to be alert. Then you know you're ready. If you're hazy, you're not ready yet. So you got to get prepared. I want you guys to, those that don't have the desktop, therefore don't have the edge zones, what do you use to recognize buying and selling? Not what platform. What indicator within the platform do you use? Pop that in the chat while I go over some settings I switched around in the NASDAQ. The NASDAQ for the room, I just filtered it, and the settings I have, you guys want to update it, are, first of all, let me go back there. The threshold is for 24. That'll filter out everything but 24 and above. Then the threshold for imbalance is 600%, and the min diff is 25. It's got the previous checked and consecutive is just 1. Okay. Now, that's the NASDAQ. Play with it. Go back and see if these are working for you. These reds are getting thrown in as they pepper through these greens, and they're still stair-stepping using these greens to bounce. This NASDAQ is brutal, meaning it's going. You got to be quicker to trade the NASDAQ. If you're not quicker, you're trading the wrong market. They're hugging this support. They're hugging this support. They're hugging this support. Yeah, this should be resistance if it gets back up here. Yeah, this dashed line should be resistance like it is. Yeah, these two reds should be small resistance. But you got to be quicker in this NQ. Like this was not good support. Yeah, it rotated once, but that wasn't that good the second time. I'll criticize these levels. These are great resistance up in here, right, with this filter. This comes down, and this is just choppy. This is neither here nor there. These greens, they work as pretty good support until they don't. Again, that red up there. This green, it works as okay support, chops this range. You don't get killed unless you hold on to stuff forever. This is where all these greens come out. But you got to go back and look and say, how are these working for me? Like right in here. Before you know anything, you're anticipating the 10-12 area to be resistance. And it is. It's not bad, right? Comes to 10, goes to 2. Then there it goes through, Anthony. Didn't work. Didn't work. It went from 10 even to 2 even. What are you looking for? 3 blondes and a brunette? Come on. So that's the settings for the NASDAQ on a 10 PNF. 10 PNF, I filtered it, trying to get some noise out. Crude oil, I also changed. I could say that. I can make those jokes. All the females in here are all women I know. You know, I'm joking. So oil, I'm going to right click oil. Threshold I have for 49 or above. And then I got previous checked, consecutive set to 1, and a 600 threshold with a 25, same as the NASDAQ, 600 and a 25 for crude oil. The threshold for bigger size is 49 and above. And again, cuts out a lot of the numbers and the noise, right? Now I'm going to show you guys something, and I think it works pretty well, but don't just rely on me. This is the homework that you should do. This is the cool stuff that you go back and look at it, and I like this setting better than that setting, right? So Dave uses a filter for greater than a couple hundred and greater than 20 in the Dow and the NASDAQ. Good. So he's recognizing edge zones for him is edge zones are just simply recognizing buying and selling, right? Who are we kidding? Now, I didn't change around the settings for the filtered footprint, right? I got it for 189 or above. You could see that, remember that selling we said, does selling come in and actually get it to go down? This was at the beginning of today's meeting. It also had a big order there. Thing comes up, works really good as resistance, downside's the right side. There's been nothing since then. Then I take it back. We didn't have nothing, a little noise in here, right? Little noise, neither here nor there. Here, this is like when it doesn't work, it still doesn't kill you, right? Big buyer does send it down before it sends it up. Sends it down 91 to 88 before it sends it up. We come over here, same thing. It sends it down, but only about 6 or 7 ticks before it goes up, but you don't get killed, right? This is some okay support, not great. I would have expected these two to work, but they just chopped around it. But again, giving you time not to get clobbered. You know, what are you waiting for? I'm just reviewing this so you guys get a sense. You see it, right? So you see it, and now you try to trade it. How about if I did this, though? Let me show you this chart. How do you like this? What's this, Anthony? What's this? This strips out everything. Everything. Just shows the edge zones on a filter. How is this going to help me? I'm going to tell you, because if you look really closely, you could see, do you see real closely the 0 by 0 so you could see the chart? You see that? If you look really closely, you see that? You should. If not, then I'm going to make fun of you. Here's why I'm telling you this. This is a great practice tool, but you got to practice. You got to go to the gym and shoot the free throws. Here's the form. This 265 lot, okay? This 265, this is part of what I was going to cover last week. So I'm kind of melding two sessions into one. But this 265, you don't know if the market used it or not. Your job is to say, hey, this is going to be good resistance. Then you look closer and say, hey, it worked. Before you see it. Before you see it. What would you do in here? Well, this is a seller, probably should go up. Look closer and you could see it doesn't. This is some stuck buying, it should go down. You look closer, it does. It only shows the instances of, and you got to change the text to the same as your background. What I'm trying to do is in this, and I know a lot of people won't do this, but just trying to get you to have an opinion before you actually seen what was going to happen without having to go back. Some people don't see anything. So if you get really close, I made the color of the text, Alessandro, the same as the background. So watch this. If I right click on here, watch this, and I make it white. There they are. Right click on there, set FP text color to black. There they are, still visible, right? Right click on there, modify or set FP text color. Which one did I have? Here we go. That's the one. Would you like to change it? No. There. It's gone. But if you look really closely, you could see it. I'm just trying to strip out the noise. That's all. Strip out the noise. I wouldn't say look at this chart all the time, just for jumping jacks. So then you come and we go to the edge zones in here, and let's just walk through the exercise of what we had down in here. What we had down here was the market finally getting through those 91 quarters. It spilled over, right? And as soon as it starts to cut the red with some green, you could predict some upside. But even before that, now I wasn't watching, so I can't say this with any certainty. But this seemed like once it went green, it sent it up pretty quick, right? So you could start to assume there might be some more upside. So let me recap. Start reading these in real time as a way not to trade them, but to qualify what's going to happen next. Make your other numbers disappear on a filter to take away the noise and just pay attention to the lines in the sand. Ask yourself this question: am I alert when I start my day? So that was another thing. I was watching a YouTube video or something. I'm not a morning person. Well, you better become a morning person. Or get up early enough so you are alert and awake, damn it. This is not something that you've done for 30 years and you could do it in your sleep. I get it. Some of you guys come from backgrounds where you could do it in your sleep. But this isn't one of them. Nobody's done it that long. I've done it the longest, and I can't do it in my sleep because it's a performance. LeBron James can't play basketball in his sleep. You got to have a routine so you're alert, and what you do is, here's what a routine does for you and professional athletes. Let me draw this. If you put a spreadsheet together, and these are your pluses and these are your minuses, okay? All you're trying to do is have as few check marks in the minus column. So if you're prepared and alert, it's over here, or at least it's not over here. So LeBron James doesn't just hurry up, run to the gym, or run to the stadium, get dressed and run onto the court and jump ball. If he did, he'd have a check mark in the minus column. Anybody would. Over time, he might play great that game, but it would be anecdotal. If he did it over time, he'd have more checks over here. So just everybody has this spreadsheet. Document what your pluses and what your minuses are. If you are a full-time doctor, you have a check mark in the minus column because your goal, it's not that it's bad, it's just you recognize that you have it there so that your goals are not what's the word? Your goals aren't unrealistic. So if you have any kind of full-time job, I think I was telling this to George as he was graduating into being a captain. I said, just adjust your goals for your trading. You're not going to make what you make as a pilot, as a trader, so don't even try. After you retire and you could put more time and effort, then your goals could change. Because here's the thing. You could be trading really well if you were in front of your screens for the opportunities and your setups. But you might be in front of your screens for 2 hours on a Monday and 2 hours on a Wednesday and 2 hours on a Thursday and 6 hours on a Friday. And your trades would have worked better if you had 6 hours on a Monday. And your setup sucked on these days. Not that they sucked, but they didn't maybe surface. The point is that it's a check mark in the minus column. That doesn't mean don't do this. It just means recognize that so you could properly adjust your goals so they're not unrealistic. And most people have unrealistic goals. So you're trying to make a little bit of money, with a little bit of success. You're not trying to right away replace what you make in your main business. And when people have to do that, they feel the pressure and they're not going to be able to do that. I always ask people, if you guys know, I've talked to most of you before you did the edge, you notice what? I always ask the question, do you do anything else? And the guys that don't, I just tell them, be careful then. You're not going to make money because you have to make money. The market doesn't just reward that. Now take a look at this as I've been talking. What's happened? Do you have to be bearish way down in here, or could you start thinking being bearish here? Or less bullish because it cut through this, right? Certainly when it cut through here. Now I wasn't watching, but if you had some selling, if you were looking to buy this pullback, so it runs up, you don't get long. You're looking to buy a pullback, let's say, in between here and here. You're like, well, you're cut in here, got to be careful. And you see some red come in and you take a shot to buy it, right? So because you want this chart to look like this, okay? I didn't see any red come in here, but maybe there was. So that's your qualifier. But at least you know that the green, let's say you've seen green come in here. I'm sorry. You've seen green come in here to qualify the bottom of this rotation. At least you know where you're wrong below it. So the definition of good locations is to know where you're going to get out when it's a loser, before you get in. And you help with that real-time qualifier to determine that. Anybody got any other questions? And then maybe you didn't get caught trying to buy this pullback because it didn't give you a qualifier. That's when you know your setup is great or it's better because it's keeping you out of trades that would have been losers. So I got a setup coming up. I got a bullish bar up. I like to buy support. No qualifier. Good, because it wouldn't have worked. Your setup has to be a ready, aim, fire, not ready, aim. I'm bored, let me trade. Or ready, click. Can't be ready, aim, click. It has to be ready, aim, fire, which is your click. Ready, aim, fire, click. Your fire qualifier. You can't just be ready, click, 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 click because I'm bored or because I got an operation in an hour and I got to get back my day. But take a look at this. Big sell-off from 93 to 88. So listen, I was dead wrong saying be careful short up in here. Not keeping you from getting short, but keeping you from staying short if it got above even. That's the whole point. So I never want to give, I'm not the smartest guy in the world. You can't be, it's gonna go here and it's gonna go through it. It's just an expectation not to be surprised so you don't hold on to stuff. But it ends up qualifying a short when it got through this green and threw out that red, held it nice, and downsides the right side up until kind of like this moment. Then it went back to bearish. So it's surprising that it got bearish back into the 80s from those 99 area. It really is. Did today's session help? Again, an exercise in real time. Now, your best exercise is now that you got the form and you do with all the content in this edge program, you got the right form to shoot a free throw. Now you just different gyms to get in there and practice shooting free throws. And sometimes you're still practicing free throws only a different way. Instead of, shooting 50 in a row, you got a partner and you shoot 10, he shoots 10. It's more efficient. Or you got 3 partners, so you don't ever have to chase the ball around. Now these greens come in. This is almost, shoot, I hope it's not an event. I don't think so. I haven't heard anything. But these greens come in, stacks above it, start scratching your head about how bearish you are before these greens come in. Now that should hold the support. The thing I didn't cover at the beginning, I want to cover now, and this is always more relevant for people that are watching this live. What's driving the market? And it's these interest rates. I didn't cover this at the beginning. It's important. Global interest rates going higher before the market, or kind of caught the global equity markets off guard. They didn't want to see higher interest rates. So global bond prices go down. And I showed this in the room. It's unexpected. It's unexpected rally in interest rates. So the market doesn't like that. So look at this on a 60-minute bond chart. Even though it's rallied today a little bit, just look at this in perspective. From the middle of September, they've softened up. And it really became front and center later last week and here because of this big drop. So it's not a big drop because fear went away. When bonds go down because fear went away, that's different. That's bullish for stocks. But there was no fear in the market. Bonds weren't up because of fear, down because that fear went away. They went down because people are pricing in higher rates and maybe a more hawkish Fed that they start continuing to, or they continue to raise the rates. They haven't found neutral after December. I told you this before. The market, equity markets wanted the Fed to raise a quarter in December and be done for a little bit. And Trump wants that too. Because I think that at some point you can't have super low rates, but you will start to affect economic growth if rates go up too fast. So we'll see you guys tomorrow in the trading room or next week in this Edge session. I'll post both recordings. Give me till the end of today to stop the recording for those watching it on recording.